The stock of the moment is Persistent Systems. It's up over 10% after reporting a strong Q3 FY24 earnings. Margins expanded while the BFS revenue declined. We're joined by Sandeep Kalra, the CEO of Persistent Systems. Sandeep, Q3 was strong. How is Q4 shaping up? Will it be better than Q3?
So first of all, thank you for having me. Let me just start by giving a few highlights of the quarter, and then I can come to what you asked for. So from a quarterly perspective, we delivered $300.55 million. This represents a 3% quarter-on-quarter and 13.7% sequential, 13.7% year-on-year growth in dollar terms. Now, a few other highlights for the quarter before I dig into the future part of it. From an overall perspective, look, we also announced a dividend of 32 rupees per share, and the board of directors recommended a stock split. So those are the other highlights of the quarter that I want to put forth before getting into the details. Now, from a forward-looking perspective, look, you're aware we don't give forward-looking guidance. But if you look at the numbers in terms of order book that we announced a pretty healthy order book. This was the first time we had order book in excess of $500 million. The total contract value for the quarter came in at $521.4 million. And this is the first time that $500 million has been crossed for us. Now, this has been a series of quarters where we have done good order books. And even if you look at our last several quarters, the ramp up that we are seeing for the new order book is what is driving our growth. So that should give you enough data points for determining where the future is.
Well, Sandeep, you spoke about green shoots in discretionary spending. Could you talk a little bit about that?
Yeah, so overall, if you look at it today, we are involved in many different kinds of businesses. So on one side, we are helping our customers do programs that are revenue enhancement. On the other side, cost containment. And there's a lot of buzz around AI, generative AI, and those kind of things. So what we are seeing in our customer base is a cautious approach to the newer year. They are also very hopeful that as the Fed has a monetary policy that eases up, they would also see better business on their side. So we are seeing some amount of relief, but I do think it'll be 2 to 3 quarters before we can see the discretionary spend pick up. So far, our revenue growth is on large deals, which are proactive, revenue enhancement, cost containment.
Well, speaking about the buzz around generative AI, you're saying that Gen AI can be a $100 million business over the next 3 years. What's gone into this forecast of yours?
So, Rima, that was a question asked on the call, whether generative AI can be a $100 million business over the next 3 years. So the answer there is, look, generative AI is at the tip of spear. So if somebody has to do generative AI implementation across an enterprise, outside of doing a small proof of concept, you need to do a lot more things in terms of having a clean data pipeline. So that spawns off new projects on the data side and so on. So if you look at the entire stack that is required for someone to implement Gen AI successfully, yes, it can absolutely leveraging the various capabilities we have at Persistent in terms of our data and AI capabilities, in terms of our software development capabilities, integration capabilities, and so on. Absolutely, it can spawn off $100 million business and more over the next several years.
Oh, interesting. All right. But what led to the decline in BFS revenue? And more importantly, has BFS bottomed out?
Right. So from our perspective, yes, the degrowth in BFSI was primarily on account of furloughs. And that should see a comeback from a furlough not being there in the Q4 part of it. And, overall, the order book also supports a healthy trend going forward. So, yeah, you're right in saying what you said.
Okay. So you're saying that the BFS segment has bottomed out, correct?
So it's kind of, bottomed out. How far it goes in terms of the growth going ahead, that we'll have to wait for the next few quarters to pan out.
All right, final question then from my end. What drove the margin expansion and what will help you achieve that 200 to 300 basis points of margin expansion in the next 2 to 3 years?
Sure. So as far as this quarter gone by is concerned, so there was a few levers like the travel cost not being there, the utilization going up, and so on. So those are the things that added to the margin improvement for us. And that was about a 80 basis points margin improvement. Now, if we look at the next several years, we have said our aspiration is to improve the margins by 200 to 300 basis points. To give you some more data points, on the utilization front as an organization, today we are at 81.5%. If we were to bifurcate the utilization for laterals versus the freshers that we intake, that we have taken in over the last 2 years, the lateral utilization already at the company level is at 85%. So as we bring the others up to the same level over the next year, 2, 3, there is a good lever right there. Our sales and marketing spend today, the SG&A spend, if I compare 9 months of this year to 9 months of last year, we are at least 50 basis points above what we were last year in percentage terms. So from that perspective, when the economy was not doing well, we over-invested in sales and marketing and related expenses, and that should also give us a leverage as the market comes back. Like that, there is significant investment in capability build, in leadership hire that we've done in the last 1 to 2 quarters, and that should all pan out in terms of performance and give us the leverage for the margin improvement over the next several years.
Okay, all right. Hopefully your new order book will continue to provide the kind of growth, trajectory that you're seeing already, and all the best for that. That's Persistent Systems 8% higher now.